India's largest and Asia's second largest dedicated insurance news platform, Insurance Alerts, is pleased to announce 5th Annual India Insurance Awards 2022.
इंश्योरेंस इंडस्ट्री का अपना अवार्ड,
Inviting life insurance companies, general insurance companies, health insurance companies, brokers, TPA, web aggregators, and insurtechies to nominate their companies.
The winners will be selected by our eminent jury members. They are Mrs. Madhulika Bhaskar, Officiating Chairman cum Managing Director CMD, New India Assurance Company Limited. Dr. S. Prakash, Managing Director MD, Star Health and Allied Insurance Company Limited. Mr. G. Srinivasan, former Chairman cum Managing Director, CMD, New India Assurance Company Limited, United India Insurance Company Limited, Director National Insurance Academy, Pune. Mr. Milan Karat, former Chairman cum Managing Director CMD, United India Insurance Company Limited, Agriculture Insurance Company of India Limited, Insurance Ombudsman Mumbai. Mr. Kamalji Sahi, former Managing Director MD, and Chief Executive Officer CEO, Star Union Daya Ichi Life Insurance Company Limited, Head of Profit Center, LIC of India. Director, India First Life Insurance Company Limited, Angel Broking Limited, Punjab Tractors Limited, and CAMS Insurance Repository Limited. Mr. Sudhin Roy Chaudhary, former Managing Director and Chief Executive Officer, MD and CEO, LIC International, Bahrain. Member, Life at RDAI.
The nomination will open on Tuesday, the 7th of June, and will close on Saturday, the 25th of June 2022. So what are you waiting for? Nominate your company in one or multiple categories from more than 20 categories. More the categories, more the chances of winning. For more details, call us on 7977733908 or mail us on events@insurancealerts.com.
इंश्योरेंस इंडस्ट्री का अपना अवार्ड,
Welcome to Insurance Alert broadcast. I am Vivek JAIN here. Today, we have with us Chief Business Officer from Pramerica Life Insurance Company, Mr. Karthik Chakrapani. Welcome to the show, sir.
Thank you, Vivek. Thank you so much.
Sir, my first question to you is a viable proposition for a life insurance company to sell a health insurance product?
So absolutely, I feel the market size when it comes to India and the health insurance space is one very large. And there are so many gaps that are still evident in this market. To name a few, when we look at the 1.4 billion population, we realize that the top 15% of the white-collared employees do have a health insurance product through their employers. The lower strata of 20% is covered through the public health schemes that are provided by the government. But there is a mid-income strata, which is quasi-white-collared or gray-collared, and to a certain extent blue-collared, of 22%. That's around 280 to 3 million population that do not have any form of health insurance. The second data point is that for the 15%, the top quartile, who do possess a health insurance product either through their employers or by probably going and buying a health insurance product from the health insurance companies and the general insurance companies, still have to pay around 81 million US an annum of out-of-pocket expenses, which means they still have to kind of delve into their wallets to kind of pay for any expenses which arise out of a hospital admission. The third major aspect is that given the new age and with the lifestyle diseases kind of picking up so much that most of the population above 35 is kind of facing some of the other lifestyle diseases, a large part of the medical expenses that are incurred by any individual or a family is outside of the hospital or either pre or post hospitalization in terms of long-term treatments. Some of these long-term treatments are covered through health insurance plans, but some of them are still not covered. which only adds to that kitty over and above the out-of-pocket expenses, which someone will have to fund by themselves. Hence, you see a lot of these crowdfunding platforms coming and picking up speed, like Milap or Ketos or Impact Gurus of the world, because what they're trying to bridge the gap between the health insurance and the outside of the health insurance expenses for larger level surgeries or lifestyle diseases that an individual or a family has to spend on. So given these three data points, there's definitely a scope for having more insurers who can distribute health insurance. Now, these more insurers could be a combination of general insurance companies, more standalone health insurance companies, and also life insurance companies who can join. And together, these three types of entities can manufacture and distribute health insurance products.
Okay. The other question which is very important is why should a customer buy from a life insurance company which basically have no knowledge of claim processing or cashless procedures and things like that, whereas all other insurance companies, especially PSUs, who are serving the country from so many years, new health alone stand companies are also their health insurance companies. So why should they buy from a life insurance company?
So the point about building an infrastructure or an administrative logistical infrastructure around a health insurance product, which is like a TPA a network or a network of hospitals that would kind of administer and help an individual claim on a health insurance product, is definitely required. And you're right that a life insurer today does not have that capability and that expertise. But it's not an expertise that requires a very different competency. That competency is available in the industry. There are many players who are TPAs today. There are many administrators who would kind of help a life insurance company also create that adequate networking capability within a short period of time. So logistically, this gap can be built. Having said that, from a customer perspective, now when a customer buys a health insurance product, he's looking for two or three key things. First, he's looking at when in the time of need, will the insurance company pay me that claim so that I'm able to take care of that medical expense at that point of time. So what they're looking at is how strong financially, how strong from a process perspective, and how strong from a network perspective is this company that is giving me this product. A life insurance company, because of the nature of risk that it has been underwriting right now, which is long-term risk on mortality, has built that financial strength, has built that foundation of customer engagement, and will quickly be able to build that administrative capability of servicing through the TPA networks and the hospital administration. That's the first thing that a customer is looking at. Second, from a perspective, it's more a customer education. It may not happen on day one, but over the period of time, it can be built on to make a customer understand that if you are looking at a company who knows how to carry forward the risk of your life for 15, 20, 30 years and kind of ensure that that risk that is going to be payable in future to you is still secure, that company can definitely understand over a short period of time and gain that experience to write a risk for 1, 2, or 3 years. It's a reverse capability that a life insurance company would have to build. From long-term mortality experience and capability, they would have to add on a capability called the morbidity experience and to how to underwrite the health of an individual for a morbidity experience. And I think that's something that the customer can definitely understand. And that level of customer education can definitely be done. So from a foundational perspective for a customer, whether it is a general insurance company or a life insurance company, they cannot be much of a difference until and unless he or she is convinced about that product, convinced about the company's promise that it would keep, the promise that it is underwriting today.
Do you think the products offered by life insurance companies will be different or will have more features than what is being offered today?
Very hard to say that, because today a reimbursement or an indemnity form of health insurance product is generally only manufactured by standalone health insurers and general insurers. And the life insurance companies are today restricted to look at only fixed benefit health insurance products. So that's the gamut today. So what the life insurance companies are also doing is they're trying to innovate within that space of fixed benefit. And you can only do as much of innovation within that terms of reference called the fixed benefit. But I think it has to be taken in phases and slowly, because as we said, a life insurance company also has to develop that experience on morbidity. Once over the period of time, as they start developing that experience on morbidity with the help of reinsurers also, innovation will come into the product. Maybe in the first few years, you may not see too many innovations coming in, but as the experience is gained, then is when you would be able to innovate on products, which today even the standalone health insurers can do, and they're doing.
What about pricing? You think life insurance companies will be able to offer a better price, because premiums are going out heavily, increasing every year and year after year?
See, COVID has actually tipped the curve on the pricing for every company, whether it is general insurers, offering health insurance, whether it is standalone health offering health, or whether it is life offering life for health, right? So that 2.5 years of experience has actually tipped the scales on the pricing. Pricing is a subject basically on the morbidity experience that the life insurer will be able to have over the time. And it would be subject to that. It would be subject to the financial solvency and the liquidity that any company possesses, maybe life, health, or general, for them to take that risk on their books. Or pass on, or be able to kind of get into a treaty with the reinsurers. So it's a subjective matter. It's a matter about experience that one has. It's a matter also about the kind of segment of population that you're trying to insure. If you go mass, you would have varied segments that you're trying to insure. But if you're going segmented approach, you may be able to kind of slice and dice that experience much better to price differently. So it has many variables, Vivek. That's what I wanted to bring out. And there's no one straight answer to pricing.
Correct. So overall, you feel it will be better if life insurance companies also come in. Customers will be king, as we always say.
Yes, the new IRDA chairman does talk about increasing the insurance penetration by the time India completes 100 years of independence, right? With the 75th year of independence called the Amrit Mahotsav. He sees 25 years as a runway to kind of make insurance as a product available to every single individual who's an Indian citizen of age and who's insurable. And if that's the ambition, you need to do many steps to increase that penetration. And one of these steps is to increase the expanse of manufacturers who can manufacture and distribute different type of insurance products, be it life or health or anything. So it's one cog in that wheel in the ambition. So fairly good for anybody to be part of that journey.
Thank you so much for your time, and especially on Sunday. Generally, we all are things. So taking out time on Sunday, thank you so much for that. And as and when new things comes up on this subject, we'll get in touch with you and maybe we'll talk further on the subject.
Sure. Thank you, Vivek. It was a pleasure too, and look forward to speak with you sometime soon.
Thank you so much. Namaskar.
Namaste. Thank you.